Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, South Africa aims to unlock funds for commodity export corridors. Fields CEO Nick Holland says nationalisation will strip South Africa of skills. And the platinum price could soar beyond the predicted $1,900 an ounce, says GFMS. South Africa's state-owned freight logistics group Transnet, which plans to materially expand and modernize its diesel and electric locomotive fleet over the next 15 years, is exploring new funding sources to expand its iron ore and coal export corridors, including the possibility of co-investing with resources companies in new infrastructure and rolling stock.
It is well known that South Africa is not taking adequate advantage of the opportunities created by the global commodities boom. This is extremely problematic, particularly as our iron ore and coal exports will earn us significant quantities of foreign exchange, which in and of itself should accelerate our rate of growth. Now, although Transnet has been steadily investing to increase capacity on the key commodity export corridors, this investment is limited by Transnet's balance sheet capacity and is insufficient to really unlock new investment and growth in our mining sector.
If South Africa nationalises its mining industry, it will be stripped of its remaining mining skills, says Fields CEO Nick Holland, with international resources companies already seeing South Africa as a fertile hunting ground for the recruitment of miners.
I don't think it's a strategy that will be implemented for a number of reasons. I mean, go and talk to organised labour about nationalisation. I think they can articulate it even better than I can. You know, the one thing that I've said before, and one of the reasons that we have sponsored the University of the Witwatersrand Mining Faculty and the University of Johannesburg Mining Faculty, to the significant degree that we have, we've committed just under 30 million rand over the next 5 years, is the shortage of qualified mining engineers in this country generally. And also South Africa is seen as a fertile hunting ground for international resource companies wanting to recruit skills when they haven't got it in their own markets. So we're already short with skills on our operations. I think if you nationalise the operations, you'll have a significant exodus of the remaining skills that we do have.
Independent precious metals research consultancy GFMS says that the company's predicted platinum price of $1,900 an ounce is a base case scenario, with US monetary policies holding the possibility of providing the industry with the shoot-up potential needed to once again push the platinum price to over $2,000 an ounce.
Well, it's a base case scenario for GFMS, but as you heard me say on gold before, it's possible that you have a blowout on the upside for gold if the monetary authorities in the United States really show zero willingness to address the imbalances that exist and continue with ultra low interest rates, go through QE3. Could we see gold going to $1,800, $1,900? Of course we could. I mean, it's a possibility, and under that scenario you could see platinum going above $2,000 again. But as a base case, looking at the supply and demand fundamentals, looking at what we think the investment drivers will be and the order of magnitude of investment flows, that's what we're thinking is kind of realistic.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.